You're welcome to TBX trading channel, and in today's video we're going to introduce you guys to TBX mentorship, and we're going to be using this book written by TBX or Benjamin X. Yeah, that's me. So we're going to be using this book written, that is the basics of forex trading, to like guide you guys throughout the first week of this mentorship. So um we're going to be looking at this following contents throughout this first week, that is 5 days. Um, we're going to look at what is forex. Obviously, we're also going to look at the types of forex traders. We're going to look at forex trading sessions and so on and so forth. So this is just the acknowledgements to the yeah. And let me just read the first one. I want to use this medium to appreciate these few people for helping me through my forex journey, and trying to appreciate Renatio, Stephen Hart, Michael Olston, so and the rest and the rest and the rest. So let's just jump into the book. So but before we dive into the book, I just want to tell you guys um to let me just give you guys some like should I call it motivation, or let me just a few talk about what forex is and what you guys should be expecting. This is going to be a life changing stuff she get. And most people, not every single person watching this video is going to become very successful trading forex. So you guys have to be ready to put in the work. Forex is not a scheme to make money. It's not a get rich scheme to make money. I know you might be checking out some of these Instagram folks showing you stuffs like the kind of life you can have as a forex trader. Yeah, don't I think for now, maybe throughout this course, throughout this 3 months course, I would like it if you guys do not disturb yourself with stuff like that. Stop checking out big forex traders that just try to oppress you instead of motivate you. Although we have few out there who tries to motivate upcoming forex traders, but please do not follow guys that will oppress you, because when you start looking at these guys, many of them actually, like, we have Instagram is known for people living fake life and all. Many of them are living life that they even dream of. They're not even living a life that, in fact, at the end of the day, when you actually like get to know them, you actually find out that you're even living a better life than they are, or Instagram will make it look like. And when you start looking at stuff like that, you might end up feeling like some shit are not working. Sorry, some stuffs are not working for you, especially when you start losing trades repeatedly. So I would like you guys to just um put in the work she get. Do not compare yourself to any other forex trader, and with time, with time, exactly, like with time you are going to get it right, and you're going to end up making the bag too. So let's jump right to chapter one. In today's in this video we're going to be looking at the first three chapters. That is what is forex, types of forex traders, and forex trading sessions. Or yeah, so it's going to be a long one, so let's go for it. So what up, fam? My name is TBX Benjamin X. Yeah, so today we're going to be talking about forex. It's just going to be like a very, 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 very quick review of this book. I'll just try to read it a little bit and explain. The book is actually self-explanatory. It's going to be on Amazon by, I think it should be on Amazon by now, or it will be on Amazon very soon. So if you just in case you need a copy of the book. So don't worry, everything is going to be given to you throughout this mentorship. I think you should get the book for free throughout this mentorship. So you have already paid for it. But if you want an hard copy, you can still get it through Amazon. So so Forex stands for foreign exchange. It's as simple as that. So the Forex market is generally one of the largest markets in the world, with over 5 trillion traded in one average trading day. Yeah, you can look this up just to confirm. The Forex market is actually one of the biggest markets in the world, and the money traded in the forex market per day is over $5 trillion. That is huge. Yeah. So there's a lot of money. Don't yeah, we trade using currency pairs. Yeah. Now what are currency pairs? just like the name implies, this is the pairing of two different currencies. That is, when you are comparing the currencies of two different countries. Now, imagine comparing the currencies of Europe or London, that is pounds, to euro, that's pounds, yeah, to what am I saying? Comparing the currencies of euros to the currencies of United States dollars, comparing the currencies of pounds to the currency of United States dollars, and like current personally Nigerian. So comparing the currency of the United States dollars to that of Nigerian naira. So you can compare as many currencies as you like. So comparing these two currencies together and looking at their different exchange rates and how one currency increase and the other decrease, or how one decreases and the other increases. Just trying to look at their, just comparing them together to see. I'm sure you guys are going to get it later on. Remember earlier I said forex is an acronym for foreign exchange. So currency pair is basically a pairing of two different currencies, foreign currencies, compared to compare their exchange rate. Yes, I think the book got me covered. Explaining forex is kind of difficult from the scratch and very very annoying actually. So let's just continue. Um, so how do we make money trading this? So uh we make money trading forex by buying and selling, as you can see here. And what do we buy and sell? What are we buying and selling? We're buying and selling currency pairs. I'm very, very, very sorry if the beginning of this stuff is kind of boring. Yeah, the beginning of almost everything is boring. So you get. So after the first week, we're actually going to go into the real deals, talking about different stuffs that you have been seeing online, how others are learning. But I think it's nice if we actually go through this boring stuff. So, for instance, let's look at this currency pair. Euro USD is a currency pair, obviously. You can see that the period it's that you can see that it's a period of euro and US dollars. If we then assume that the price of euro of EU short, that's a short way of writing the euro USD, is 1.0878. That means we are going to need 1.0878 to get 1 euro. We'll get into more details here. So what I'm just trying to say is that you can just read all this. For instance, if the price of euro is um 1.0878, and maybe you bought a huge sum of it. Okay, let's just use something that's more, or I'm more familiar with. For instance, if one pen, just one pen. Okay, let's say one pen is, let's say, $10. And now, for some reason, you actually, let's assume that one pen, let's put it there, one pen equals euro USD, for instance. So let's assume that one pen is $10. So now, for some reason, I actually believe that the price of one pen is going to rise from $10 to $50. Actually, maybe a friend of yours that work in the pen company told you, or maybe you've done some analysis and you found out that the price of pen has been increasing over years, and you just believe that the price of pen is going to increase from $10 to $50. Then maybe you have a lot of money to spare, then over then you bought over 10,000 pens. So let's say you bought over 10,000 pens. Okay, so now you already have one pen is $10. So currently you just bought, oh sorry, you just bought 10,000 pens. 10,000 pens. So currently you're actually having, so currently comma, you have $100,000 worth of pen. One. So currently, it means you have actually you have $100,000 worth of pen. So maybe just as you predicted, the price of pen actually did increase to $50. So current price, or let me say new pen price is $50. What will be your new balance? New balance. Yeah, you'd have ended up making how much? That would just be $10,000 times five, because your what are you calling it? The price of pen increased times five, so you have ended up making about $500,000. You would have ended up making about $400,000. Your new balance is going to be 500,000 So now I know this might be a little bit like confusing and everything, but you're going to get it very soon. But just understand this concept. Just you have a pen. You bought one pen is $10,000. When one the rate of one pen represents Euro USD. When the rate was still $10, that is when you still needed ten worth of USD to buy €1. You bought 10,000 pens. That is, you bought 10,000 of this. That is, you add $100,000 worth of this pen. So now, when the price actually increased to $50,000, I mean that's times five. It means that your $100,000 worth of pen will definitely increase to $500,000 worth of pen. And don't forget, you actually used $100,000 to buy those pen. So your profit is going to be 400,000. What am I? Yeah, your profit is going to be $400,000. So you just actually like made $400,000 just investing in pen, because you actually believe that the price for some reason is going to rise. So this concept, this ideology is actually what we are using trading forex to. Maybe you have this is the current price, and maybe for some reason you actually believe that the price of this is going to increase to a certain price. Then boom, it increased to that certain price. That is, it rose, as you can see, Euro USD rose to 1.1050. Then boom, whatever you actually invested, you'd have ended up increasing 1.58%. That's from 1.08782 to 1.1050. So that's all about that. So now let's look at so that's what all this is about actually. So just we try to read it up so you get more about it. So I really advise you get a book to understand. This is just like this stuff is just like as if I'm doing a book review. You get. So now let's talk about currency pairs in full. We already know that they are we already know what they are, like what they are made up of. That is the pairing of two different currencies. A currency pair has three letters per pair. That is, if you notice, we have EUR USD. We don't have EU USD. It is three letters per pair. As you can see in this section over here, you can see different currencies and their abbreviations or symbols here and their nicknames here. So um and they are divided into two different parts. That's the base currency and the quote currency. The base currency is usually known as the stronger currency. You need an X amount of the quote currency to get 1 unit of the base currency. I don't know if you guys remember when I said something here. I said uh if the pen one pen is $10 and we are assuming that one pen represents Euro USD, it means that you're going to need 10 USD to get one sorry you're going to need 10 USD to get 1 euro. That's what it implies. So the price, if we say the price of euro USD is what do we have it the other time? 1.0878. 1.0878. It means that you're going to need $1.0878 to get 1 euro. So it's as simple as that. So now, we're talking about the base currencies, and we say the base currency is actually the stronger currency, while the quote currency is really the weaker currency. That is, so for instance, when you are seeing a pair like this, you are seeing Euro USD. Most of the times, it implies that the value of Euro is greater than that of USD. When you have pairs like GBP USD, it implies the value of GBP, that is Britain pound or British pound, is stronger than that of USD. Although there are some aberrations, there are some times that it is not always like that, and we're going to look at that later on. So now we're in chapter 2, types of forex traders. Okay, so we have different categories of forex traders. In this section, we should be able to look through a few of them. Now, before we jump into the types of forex traders, we need to know who forex traders are. So, who are forex traders? So forex traders are people who make their ends meet predicting the change in price of a currency pair in a foreign exchange market. That is, a forex trader predicts if the price of a currency pair will appreciate or depreciate, that is, rise or fall. Then backs up his prediction with a certain amount of money, and if the price moves as predicted, he or she makes money, and if it doesn't, he or she loses money. So, in short, a forex trader is someone who makes prediction, and not only makes prediction. After making a prediction, you back up your prediction with a certain amount of money. That is, you invest in your prediction. And if price goes according to your predictions, then you're going to end up making money, and if not, you're going to lose money. It's as simple as that. Yes, in forex, you are going to lose money. There is no strategy on this planet that will help you make money without losing money. The only thing you can get is strategies that will help you make more money than you lose. And that's what we term as profitable. Being profitable means making more money than you lose. But you are definitely going to lose money. So let's look at the classification of traders by time frame. I actually like classified these traders like this to make it easier for us to like understand, or for people like me to understand. I like seeing stuff being broken down into bits before getting it. So we have classification by time frame. We have scalpers, we have day traders, we have swing traders, we have position traders, aka investors. So we're going to explain more of that later. We have classification by analysis type. We have that's fundamental analysis, technical analysis, and I think there is one other, maybe system analysis or so. But because I don't really use it, I've never used it, and I've actually never met any person who uses it. So that's why I just choose not to include it in this book. So, but if you're interested, you can actually like look up the three types of um the types three different types of trading, or of analyzing the market. I'm very sorry about that. Yeah. So we have classification by strategies. That is classification by strategies under technical analysis. I personally don't really trade fundamentals. So this book is usually going to help only those who trade technicals. I'm very sorry if you want to base on fundamental trading, that is the trading of the news. Don't worry. I think there are prescriptions of books, or where you can get to actually learn more fundamentals inside this book. But we don't actually do more. Although we did cover a little bit about fundamentals. Let's see. We did cover the basics of fundamentals in this book, so you can still actually learn a thing or two about fundamentals. We'll check that later on. So, and we also have one more classification by time frame. Okay, that's it's here. So let's continue. If you're new to forex, this is one of the first books. This if you're new to forex, and this is one of your first book, this would look absolutely okay. But if you've been trading for a while and you've read a lot of books, this might look strange. Yeah, the reason why I said it is because nobody actually classifies types of traders like this. So I just did it. I feel it's actually nice like this. So on one thing I do tell people is that you don't choose the type of trader you want to become. Like you don't choose the type of forex trader you want to become. You don't choose, okay, I want to be a scalper. I want to be a fundamentals trader. I want to be an indicator based trader. You actually it actually chooses you. That's why one of the I said something when we started this video that as a forex trader you should not compare yourself to other traders, and that's the point right now. Because when you start comparing yourself to other trader, you want to do what they are doing, and you might end up like not using what works for you. What works for different people, what works for different people is different. For instance, I hate scalping. I eat it. It does not work with me. But in this country, one of the biggest forex traders in this country are scalpers. One of the biggest forex traders I know are scalpers, but I just don't like scalping. So that's as simple as that. So whatever you do works. Like the strategy you're going to use and everything, what kind of trader you're going to become, is going to choose you. You understand? It's going to choose you. You're not supposed to actually choose it. The only thing I would advise is to check everything out. Try scalping, try day trading, try swing trading, try position trading if possible. Try using fundamental analysis. Try using technical analysis. Try using indicators based trading. Just try everything, then you'll find out which works for you better. So classification by time frame. The classification of is based on grouping traders with respect to their time frame you trade with. And the time frame you trade with can say a lot about the type of trader you are. In fact, a lot of gurus prefer to classify the type of traders we have based on only time frame. Yeah, the type of time frame you use can say a lot about your trading. A lot. In fact, a lot of people actually use just this to classify traders. Yeah. So let's just look at the types. So we have scalping. You can try to read this all on your own. We have scalpers. Mm-hmm. Scalpers. This is a name given to traders that make money from small changes in price. Scalpers enter positions and exit almost immediately. And because of this, they trade using very low time frame, like from the 15-minute time frame down to the 1 second time frame. Scalping is basically a short-term trading style, and yeah, that's all about scalping. It's a very short-term trading style. These are traders that like to get in the market instantly and get out instantly. They don't really like taking too much time in the market. Like most scalpers they don't actually hold trades for long. They just like getting in they want that money. They want to as they want as they want I don't know why I keep repeating the same word over and over and over again. They want the fact that as they're placing their trades, they're getting their money. So you are getting in, getting out, getting in, getting out. So I've been saying time frame for a while now. So if you don't get it, just be with us. Very soon you're actually going to understand it perfectly. But in short, time frame is as the name implies, it is just the time frame in which you are viewing the market at that particular time. You understand? That's the best I can actually do for now because I won't be opening trading view for now. So we're just going to be going from um, um, Microsoft Word to CorelDRAW back to Microsoft Word like that, like that, like that. So probably maybe in the next video we're going to do a little bit of trading view. Not not in the next video. Nah, but very soon. Yeah. So what are the advantages of being a scalper? It is the best for trading small accounts because of very tight stop loss. So it is the best for trading small accounts because you are going to really lose money. You understand? So if you're a professional, if you've been trading for a while and you're watching this, I'm very, very sorry. But I want this video to be like a beginner's guide to someone who has never traded Forex before in their life. So if you've never traded Forex before in your life, I hope you guys are getting it. And if you're not, try to watch this video over again, or try to get this book, or just try to like message me either through email or so that we're gonna have a Zoom class or something like that. But I just hope you guys are actually getting it. So the next thing is you don't get caught in reversals. Now reversals are kind of like, let me show you an example. Okay, okay, yeah. So let's assume the market is doing something like, I don't know what I'm looking for. Oh my god, it's been a while I use this app. Eh, nah. Okay. Okay, let's try using this. Okay. Okay. Yeah, this is nice. Now let's say price is going. You can see that price is going up, it's coming down a little bit. It's going up, it's coming down. And likewise, we have something like this. Price is going down, it's going up, it's going down. So just assume that this is how for now. You don't actually need to understand this. Just assume that this is how the market works. So if you look at this, price moves up, then there's this short term reversal. It's called a pullback. Price moves up again, short term reversal called a pullback. Then if I join this to this, I don't think I can. Okay, let's say, oh, that is beautiful. Okay, let's say this is how the market was. Now this is an actual reversal. I can see price was going up, then it reversed to the downside. You don't get caught in any of this. You don't get caught in this short term reversal, and you don't get caught in this long term reversal. That is, the scalper will get in from this area of the market, get out, sell from ear to ear, get in from ear to ear, get in from ear to ear, get in from ear to ear, and so on and so on. So that they actually don't get caught in reversals. However, very nice if you have small accounts and if you have the time, you make very quick profit. The moment you are placing your trade, you're making money and you're getting out. That's very, very sweet. You make the best it is the best for traders with little patience. Yeah. And I told you that your strategy is going to choose you. And when your strategy is going to choose you is through your personality. Forex kind of bring out the kind of person you already are. So if you're the kind of person that is not patient in real life, then you'll not be able to hold trades that lasts long. So you want to take trades that are short term. You get that's a lot small. Why the cons? Trade precision is required. Candlestick moves are very quick, and you'd have to enter at the same time you see your exact entry, because few seconds later could be too late. Now I said something about time frame. We are going to be using very, 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 very small time frames. So it means that market, and in small time frames, market moves quickly, like very quickly. That we have, I think the smallest time frame we have currently is this 1 second time frame, and we all know how quick 1 second moves. And we have 1 minute time frame. We all know how quick 1 minute moves either. So so if you miss your entry trying to, like, if let's say you miss your entry on a particular trade, the entry is gone. You have to look for another entry. That's one of the disadvantages. You have to get in quickly, and scalpers trade only crumbs of the market and not the real deal. So they don't really, like I told you, they don't hold market for long. To just get in, get out, get in, get out, get in, get out. So for instance, a scalper can get in from ear to ear, get out. If he sees that if he sees that the price is still going up, he can get in from ear to ear again, get out. If he sees that the price is still reasonable, he can get in from ear to ear. Yeah, and so on. I had to pause the video a little bit. I'm sorry about that. So let's continue. So they don't actually, well, they don't actually like get the whole of this. They don't really like get the whole of this. But if you look at it in some sense, they might actually end up getting the whole of this, since they are getting it, getting it, getting it, getting it. But it will be more. It's usually most likely stressful to me. Usually most likely stressful, but They don't actually get the whole move in short. And scalping can be exhausting because it requires a lot of screen time. If you have to stare at your screen all day long in order to scalp, you can't actually like place a trade, then maybe go offline or go and rest a little bit or something like that. You have to stay on your screen all day. Yeah, so like we're saying, um, yeah. So next type of traders we have is day traders. Day traders are traders who trade not long term. Sorry, I still have to make some corrections. They are traders who trade short term trades, not long, but their trades are actually longer than that of scalpers. These traders tend to hold trades for a day or more. I really have to make corrections. This trader tends to hold trade for a day or more. Or I think I'm reading swing traders, or am I? Feels like I'm reading swing traders. And I have to make a correction, lots of corrections here. Yeah, can you see about that? I think yeah, this is a swing trader. This is swing traders, not day traders. So I think the day trader. Oh, sorry. A day trader is a trader who day trades. That is a trader who trade within a day. Unlike scalping, scalping, fewer trades are opened and closed by the end of the day. Day traders operate within the 4 hours time frame. That's each for the 4 hours time frame down to the 15 minutes time frame. So let me explain this a little bit. Compared to the scalpers, day traders open trades that last long actually. They don't get in, get out, get in, get out, but they don't place trades that last longer than a day or maximally 2 days. So you get so they like to open trades and they also like quick money. But they don't and they don't really have patience. But their patience is actually more better than that of scalpers. For instance, like they don't. For instance, we have the traders that and once it is getting to 11 p.m. Even if they are still in loss, they prefer to close that trade than holding it till the next day or stuff like that. So what are the advantages? It is less stressful compared to scalping. You don't have to be on the screen 247 to make money. Scalpers, they only make money when they are on screen. But as a day trader, you can actually like place a trade, go off screen for a while, as long as your stop loss or your stops are in place. So it's actually like it's to me, I really prefer it to scalping. Please do not take my word for it. It might actually become a very, very nice scalper and even end up making more money than me because the reason why I don't like scalping is not because I have any issues with scalping. It doesn't just like concur with my personality. I'm kind of person I like waiting. I can place a trade for days, probably even weeks. As long as it is going to my target, I don't really care. But I don't really like something that comes in quickly. It's kind of scary. I don't like losing money instantly. It's kind of like affects my psychology somehow. So you get so and let's continue. We have the pros. You're kind of your own boss. You control your own trading hours. Yes. And this advantage also goes to scalping too, but it is more advantageous here because you can choose to trade from so time to so time a day and be off the market. Different ways to trade to day trade. Yeah, there are numerous ways to day trade. No overnight trading risk since trades are closed before the end of the trading day, so there are no overnight trading risks. Now I said something that earlier that day traders would trade for a day, maximumly two, and it is on very rare occasions. So most times, like the name implies, day traders the old trade is for only one day, and so you don't have to. Most brokers do collect midnight fees and more. I think commissions or stuff like that when you go the trade over the midnight and stuff. So you are going to avoid that day trading. The cons: less trades compared to scalping. More patience is required compared to scalping. Newbies tend to lose more trades when they get started. Yes, you tend to lose more trades. They pay multiple transaction fees compared to scalping. Now, swing traders. Day traders are long term. Swing traders. Let me quickly change this. Swing traders are long term traders. These traders tend to hold trades for more than a day, sometimes even a few weeks, or a week or two. That's a few weeks. Swing traders from swing traders trade from the higher time frame. Therefore, it takes a little more time before price hit their target. So personally, I actually love swing trading because um, I personally like to watch my money move, and I actually like the fact I always enjoy the pleasure of predicting something that lasts for a long time. I don't know why. So I don't know. I just love swing trading, and since I'm the kind of person that can invest for years as long as I know my investment is secure, you get. I have the patience. So what are the advantages of swing trading? They ride the real moves of the trend. So when a swing trader is going to enter a trade like this, they're going to get in at the bottom and ride it to the top. Sell from the top and ride it to the bottom. You understand? A day trader will most likely get in from ear to ear, ear to ear, ear to probably ear, ear to ear. But swing traders will get in from the very low and take it to the eyes, get in from the very eyes. Sorry about that. And get it and take it to the lows. So it is actually very, very, very nice to me personally. You might not like it, but I do. So okay, so mhm, the next is analysis execution takes less time. You don't have to spend much screen time. This is one of the biggest advantages of swing trading. You don't have to spend all day on the screen. Personally, I do analyze during the weekends. Probably sometimes I analyze my market during the midnight, but I most times analyze during the weekends. I must have analyzed most of my peers during the weekend. Then I take out some that is most likely to like give me reasonable trades during that week. Then throughout the week, I'll just be waiting for price to get to my area of concentrations, or I said area of concentrations. Yeah, my OTZ, optimal trading zones, and the likes. So once price gets there, I look for my entry, and you understand, it's that simple. So stuff like this is not you don't have to like sit down on the screen 247 looking for the next trade, the next trade. You just get in, and once you've gotten in, as long as you've set your targets, your stops, your target and your stops, you are good to go. You can go offline, you can go and do stuffs and just come back to check it once in a while. It's as simple as that. Make greater Another advantage that you make greater profits. Make greater profits. So when you hold the trade for a very long period of time, the profit tends to be greater than when you do for a short period of time. Yeah. You make greater profits on a single trade. Don't forget, this is very important on a single trade. For instance, a swing trader can make over $10,000 in a single trade. Yeah, because if you hold it for a very long period of time. But the advantage of day trading is that one single trade that you held to make $10,000, a swing trader might end up making about $20,000 because they are buying and selling as price is moving. For instance, let me explain. For instance, a swing trader held bought here and got out here. It didn't. A swing trader will not has no business with any of this. Oh my god! What this? Yeah, a swing trader has no business with any of this. Any of this now. All he does is to get in here and get out here. But a day trader will get in here, get out here, get in here, get out here, get in, and stuff like that until it gets to the top. So yes, the day trader might end up. Sorry about that. Might end up making more money than the swing trader, but it still depends on the kind of swing traders because we have some swing traders that we get in here, hold to the top. When price gives you a pullback, get in here, hold to the top, and stuff like that and stuff like so. The amount of money you make in reality depends on you, not the kind of trader you are, not the kind of trader you are like meaning not the kind of maybe you're a swing trader, you're a day trader, which means you make more money now. But it depends on you personally. You understand? So less stress. It is less stressful compared to scalping and day trading. Pay less transaction fees and lots more. The cons require a lot of patience for setup. Bigger lot size are required. Small trading capital isn't nice for swing trading. Yes, you need more money to trade swing trading. I'm not going to say any capital here, but just know that you need more money to trade swing trading. In fact, you actually need reasonable accounts to trade. Imagine having the $10,000 and you held the trade for a week or two with 0.0 with the smallest lot size, and you ended up making like $20. You're not going to feel paid, you're not going to feel satisfied, you're not going to feel you might be happy that you actually held the trade for a long time, but it's still gonna feel weird. I don't know if you're getting me. You're still gonna feel weird about it. Therefore, why should I hold the trade for like a week or two only to make $10 or $20? But if you're holding the trade for a longer period of time, actually, if you're holding the trade for a long period of time with a bigger account, it's actually very, very nice. So but you're going to pay multiple overnight funds or commission fees. Yes, when you're holding a trade for like a week or two, that's going to be a lot of commission fees to be paid. So the last one is position traders. These are also called investors. These are trend and they're also called trend followers too. They ride trend all the way from the beginning to the end. So they can hold trades for months, years, and so on. So the pros, they follow the trend to pick less screen time, very less screen time, low risk compared to day trading and swing trading, and the cons require a lot of capital, like a lot of capital. When you want to invest for a year or two or 6 months or 3 months, you should know that you're going to require a lot of capital. Huge losses if price reverses against prediction, yeah, there can be huge losses because you're most likely investing than trading. And you when you're investing, you don't invest with small amount. For instance, you have a $10,000 account and you are day trading or swing trading or scalping. You end up risking something like 1%, 0.5%, 0.1%, depends on you. But when you are position trading, you are going to end up risking something reasonable like 10%, 20%, 30% because you are more or less like investing, not um trading. So we're going to look at the next one, classification by analysis type. Um Classification by analysis type is based on grouping traders based on the type of or based on the way they analyze and predict price. Basically, there are two types of analysis and we will discuss them in details later in the book, and that's fundamental analysis traders and technical analysis traders. So fundamental analysis traders they are fundamental analysis based traders are traders that basically use news and other economic events to execute and exit their trades. Fundamental analysis traders use tools like retail sales, industrial production, consumer price index, and whatever. So, by technical analysis traders, these are traders who use the technical side of aspect. That is, they use tools, candlestick, patterns, different kind of stuff to understand the in-depth knowledge of the market, to understand what is going on in the market. You understand? So, classification of by of strategy classification by strategy that is the technical aspect, not the fundamental. We have the indicators based traders. These are traders that uses only indicators. Only indicators. That is they get their analysis through indication through indicators. They get their confirmations through indicators. They get every single thing through indicators. And these are example of indicators in case you don't know. Don't worry, I'm going to show you guys how to get indicators in case you would like to become an indicators based traders. We have naked price action traders. No, it is not what you think. Naked price action traders are actually traders that uses the market chart bar. They only use tools. They don't use indicators at all. You understand? So they use trading tools such as horizontal line, vertical line, horizontal ray, Fibonacci, and the likes. While we have mixed price action traders, these are traders that uses both indicators. Um, they use both indicators and price action analysis. That is, they don't rely on only the charts and they don't rely on only indicators. This is actually very, very nice. Um, Personally, I think in life you need a little bit of everything to you get to understand more about the market, but it depends on your choice you get. So this is where we're going to be stopping today after we've checked out this chapter. So the chapter 3. Okay. Forex trading sessions. In this session, we're going to check out something called trading times and session. First of all, you've got to understand that there are several sessions in the forex market, and each session affects price differently. Now, what do we mean by different sessions? Okay, now let's assume the forex market is, the forex market is so big and it is always on 247. So, for instance, you don't expect the forex market to just be just one. Now, let's say, okay, for instance, if forex market is a company, you understand, everything forex is just one company. For instance, and they are always online 247 from Monday to Friday, 247. You don't expect the same amount of people, or maybe the same amount of workers, or the same person, the same workers to be operating from Monday to Friday non-stop. They're definitely going to have shifts. They're going to have people that work in the morning, people that work in the afternoon, people that work in the evening, people that work in the night, and likes like that. So this shifts is the same thing as forex trading sessions. The forex trading sessions are different, like there are different shifts um or different time shifts in the forex market. That is, there are different let's just continue before I start repeating the same words over and over. Okay, so if you read all of these, okay, I think I give, let's say for first market inside. Okay, I give a very nice analogy here. Let's try to look for it. Let's assume the forest market is one very big supermarket with five small markets inside it. Let's say the first market inside sells food items, second sells fabrics, third sells drugs, I mean medical drugs, yeah. Fourth sell phones and gadgets, and the fifth sells musical instruments. You get the point very soon, yeah. So now this supermarket is set to open, is set to be open 24 hours a day. That is, anytime you get to the market, at least one of these markets is open. That is, anytime you open the forex chart, or anytime you try to you want to trade, one of the forex market is open. That is, there are several markets in one forex market. Whenever you get to the supermarket around 6 in the morning, both the market selling fabrics and the market selling phones are always open, while the others are closed. By 3 o'clock in the afternoon, the market selling drugs, market selling fabrics are open, and food items are open while the others are closed. Now I don't want to read this stuff to the end, but you get the point. One big supermarket, it has five other small markets inside. As long as one market is always open, at least one market is always open whenever you get here. You can say that the supermarket is open 247 for 5 days. It's as simple as that. So that's how the forex market is. The forex market has other smaller markets inside it, and these are the that's yeah, these are the markets. But we just call it time sessions. You understand? But just to make it more understandable, we call it trading sessions. So just to make it more understandable, let me just call it um markets. So the forex market has other smaller markets under it, or let's say trading sessions under it. We have the Sydney session, the Tokyo session, London session, and New York, and they have different times they open. But the fact is that anytime you open your forex chart during the week, anytime, at least one of these markets is going to be open. So we say the market is open 247. So this is you can just screenshot this, or if you have the book, just download this to know the times that the market is open. Although we have daylight saving time, and during this time, I think there's a little bit of change in the opening and closing time of the forex of the trading sessions, and just you can just read through all these, and that's all. And if you want to know, if you want to get in what session you are at any period of time, you can just check out this. You understand? So we're also going to look at how to use these trading sessions later on. I think that's it for today. So in the next video, we're going to talk about what is a pip, and I think that video should be a little bit more interesting than this. Probably by then I won't be so exhausted. Yeah, I hope you guys actually enjoyed this. Yeah, that'll be all for today. Bye.